countries. I think the main issue is how to deal with that growth in a way. And in some countries, clearly, growth has been too fast. And there's been growing above potential. So here you don't have the output gap. Here you have just the trend, how far some countries have been above their trends of their pre-crisis level. So you see that the situation is very different, but what you see is clearly that if you look at Turkey, or if you look at Argentina, or if you look at India, they have growing much above what they have been growing before. So you have an issue then of several signs of overeating. These several signs are inflation, because you do not only have imported inflation, sometimes you do have the real inflation going up in some countries, like in India. You have, of course, deteriorating current account, either shrinking surpluses or growing deficits. You have credit booms in some countries. So clearly you have some signs of overeating that are dangerous. And you have also some countries that are not growing above their potential, and there's another issue. I think you have 4 types of countries. The real overeater, I think that clearly Vietnam is one, or Argentina is one. You do have a risk, and maybe it will not happen, as Darius said, but you do have a risk of hard landing, clearly a very high risk in those countries. You have the one with bubbles, not really overeating, but looking at treating bubbles in the real estate, like Hong Kong, like China. You have the ones which are stagflation, the one who have to deal with low growth and high inflation, like Romania, like Russia. They are struggling with very low growth. So, and you have also exchange rate issue in some countries, like in Brazil or in Turkey, where you do have risk that the currency may collapse because they attract a lot of volatile inflow. And if there is an issue, a problem, these inflows can come back and have a very big impact on the currency, because at the same time, clearly the current accounts are deteriorating very much. So we have some risk in emerging markets, but they are very different from one country to another. So what about Asia? We are positive, clearly. I mean, the growth is absolutely amazing. Nevertheless, clearly, we are clearly decelerating in Asia, and I think it has been dealt with. We believe that there's going to be a very soft landing in China. We are a bit under the consensus at 8.8. We believe that clearly the Chinese growth, the management of the Chinese growth will be done, and that this little slowdown will be very well managed. And I think it has been said in the debate that you have a strong government able to implement very strong policies. Our issue on the Chinese risk is that we don't believe there are macroeconomic risks. We don't believe, in the short term at least, on the collapse of China. What we believe is that there are some micro risks, corporate risks. And the first one, of course, has to do with the way the exit policies are implemented. You look at how the credit growth in China, and everybody's saying that credit is being controlled in China. You know, when you are coming from, I don't know, when you're coming from India, for example, the rate of growth of credit is still very high in China. It's still something like 18%. So on the Chinese relative terms, it's a big slowdown. But relative to other emerging markets, it's still pretty dynamic credit. It's still growing. Credit is still growing. So there are certainly so many constraints. Plus, our issue is that, of course, credit is decelerating, but you do have a lot of shadow banking in China. You have a way that private corporates clearly are able to finance themselves through other channels which are not very much controlled. And I think that's clearly an issue. I mean, and I heard that there is a lot of, especially corporate-to-corporate credit, which is extremely dangerous, because it means that when one corporate fails, it can also link into its fail, and the other corporate that is linked to the corporate. So this uncontrolled channel of credit is something that is dangerous, and it's one of the corporate risks. The second corporate risk is a bit the opposite one in a way. It's not the lack of control of credit, is rather the fact that we are now the Chinese government clearly implements a withdrawal of its fiscal stimulus, and there are many corporates that have been supported thanks to the stimulus during the crisis, and now they are naked in a way. Maybe they should have been bankrupt during the crisis, but thanks to the flow of credit, the exchange rate, they've been surviving, and now because the stimulus is withdrawn, there might be some risk appearing now of these very fragile corporates. And you see that in the survey that's done by Coface China. Clearly one of the fears in the survey is clearly the impact on the negative impact on corporates are linked to these policy measures and the fact that now the Chinese government is changing its policy. So there are some risks here. I'm not sure I have much time to talk about, but I will say the ratings, and maybe I will conclude by that. So you see that Hong Kong has the best rating you could ever dream of, which is A1. So, of course, it's good news because to us, before the crisis, Hong Kong was an A1 rating. It's an excellent risk in terms of corporate. And it's turned to its corporate. Does it mean there are no risks? Certainly not. I mean, we've heard that there is clearly the bubble and the real estate bubble issue. And there are some risks about inflation and the way it increases in costs for corporates. All in all, I believe that macroeconomically speaking, we'll have a slowdown in Hong Kong that's going to be managed, and the kind of rate of growth we will have to in Hong Kong now is clearly a normalization of growth. So it's good news. So what you see in Asia is very different from advanced economy in terms of rating. Almost all the economies are back to their pre-crisis rating. So the risks are much stronger, much better, and back to where they were before the crisis. We have a little fear about Thailand because of the political risk, but I think we have overstated this fear. I think that clearly the Thai economy is doing much better than we expected. So maybe we have to think about this negative watch. But we have a lot of fear about Vietnam. Because here, Vietnam, you have clearly the liquidity issue, the growth, the current account deficit, everything that Darius mentioned, which clearly, and for us, it's a very high risk, plus difficult governance, lack of transparencies of corporates. So clearly here, we believe that in terms of corporates, we do have macro problems and also micro governance issues that makes it a pretty high risks. So I think I will finish with that, and thank you for your attention. Thank you.